My name is Shravan. I've been a software engineer for over 10 plus, about 12 plus years now, but in the investment industry, I'm barely like 6 months old. And I have seen so many of my friends doing mutual funds, and I thought like it was a big pain and like opening a demat account and 100 different things. But after a lot of time, I have learned there are companies like who offer you mutual funds without any hassle and etc. So that's where I got started in the month of May. And eventually I found out that there is a difference of regular funds, direct funds, and I even went to go to the fund house to buy my mutual funds and see how do I set up my login, keep my track of stuff. But I thought like it was very hassle, and then I started googling about any platform that offers me direct funds without any commission or anything. That's when I encountered Grow, and I just got started. Yeah, so that's the thing. If only I can roll back my time, I would have told invest no matter how much big it is. You don't have to set up big things, like don't have so many to do things. Investment can start without an aim, but just start it. Then you can make your aim eventually. I started with ULIP and LIC, but off late, very late in my life, I have learned that ULIP is going to hurt more than help in real time. So I have recently encashed my ULIP policy and converted it all into cash, and then I started investing in mutual funds. So if only I can tell any of my 25-year-old friends or cousins or anybody, I just get started with even 1,000 rupee of investment is going to bring you a big bang when you're like 30, 35-year-old. So it's the power of compounding. Hardly people understand in the early times of life. So I don't really have a target. So I just got started in the month of May, saying like I haven't laid my hands on money until now. So I thought, okay, let's give me a shot on mutual funds. I even went into stock and just to make sure like I don't ever regret in my life that I didn't ever play with stock. So, but it looks like playing with stock actively needs your brain working all the day, all the week, all the month, and etc. So there should be actually a passive investment going towards mutual funds. And I haven't made a target, but currently I have a kid for whose education I have to pull some money. So I thought that's my nearest target that I have to venture. And every year I really have policies like LIC, SBI, and everything. So I even go for RDs. So in place of RDs, I thought like I'll open a mutual fund every year and pay it in terms of like debt fund at least, because that is the safest of all mutual funds that I know of, and pool some money. And I have even compared how an RD performs with respect to a debt fund. So and I've seen like the returns on a debt fund are more. I ran the both parallel from the month of May till the month of November, and I've seen like the returns on the mutual funds are more. So I thought I'll give that a practical shot going forward to make my premiums being paid by the mutual funds itself. So it's a little less burden on real time. Yeah, so I know that SIP will keep us sincere and everything, but there are quite a good amount of logic on why mutual fund houses encourage an SIP but not lump sum. So SIP really doesn't require more of your commitment because every deduction happens automatically, and then you don't really have a way to procrastinate your payment. But if you really know that you're sincere, I would recommend going for a lump sum, because there are some fund houses which don't really give you the flexibility of choosing the SIP date. The SIP dates are typically 1 to 10. So which is when your salary will be flourishing in your bank account, and beyond which you might have to run out of balance. But honestly, if you time it well, the regular SIP payment can happen much on the third or fourth week, which will fetch you more returns than happening on the first or second weeks. So if you know that you're sincere and you can hold your money till the third week and fourth week, you can go with lump sum. You can keep track of what amount you're putting. You can do a variable amount. But your sincerity should be tagged to at least your SIP amount should go. If you say your SIP amount is 3K, make sure by the third week you at least invest 3K or more than that if you have any, but nothing less than 3K. So it's all subjected to how sincere you are in real time. My best investment so far is on myself. I read a lot. But honestly, in terms of finance, I haven't really went into any proper investment so far. I always have some money, I pooled it. As soon as the pool gets bigger, I send it to my dad so that he takes care of whatever has to be done at home. But they're not really wise investments which would have fetched me so many returns had I done all by ourselves discussing what is a mutual fund, what is an ETF, what is a stock. I haven't ever ventured into playing with finance. So honestly, the best investment so far is on my friends and my family. That's it. My worst investment is the ULIP that I have taken without knowing what is the in and out of. It was an ICICI Prudential fund that I have took almost like in 2007, and it was a 1,20,000 investment which grew only to 2,79,000 the last month. So I have encashed it the last month, but I know that if I had put the same 1,20,000 into a debt fund long time ago in 2007, it would have materialized to something more than what I have by, because ULIPs typically drag away the maintenance charges, the mortgage charges, the mortuary charges, your insurance charges, everything. But now I have decided, like, I split the money into two. I have taken a term policy and I have put the rest of the money into mutual funds and have piled up some for my stock playing and some more for mutual funds coming soon. Money being lost, I just got started with stock and mutual funds, and since I started on the month of May, I am seeing like mutual funds are on low because the market is flying quite low. But it's a sincere advice from the mutual fund or financial gurus that if the market is low, it's time to go more. So be bullish when the market is bearish, and when be bearish when the market is bullish. So I typically want to be sincere, and I know it'll be fun to watch your numbers grow over time, but you'll see all negative numbers. But that's the time where you have to bang the market with bigger stuff and see that you keep invested, you stay invested. I know if you are not into SIP, you'll always have the resistance, should I invest more, because all the numbers are in red. But that's the time you'll get more out of your every rupee that you put in. Fund emergency, I have made sure like I have at least 3 to 4 months of my salary as liquid cash available all the time. So that's something that is not replaceable with anything, no matter what you have. But in the case you have excess funds, don't park it in your savings account is my only advice that I can give to myself, owing to 6 months back. Had I been 6 months back, I'd have generally parked it in Yes Bank, where I typically get 6.5% as standard savings bank's interest. But I know why 6 when you get around 8 to 9 in a mutual fund. So I do both the things in parallel. I'm not ditching my Yes Bank account, but I'm giving more to my mutual funds account, so that, like, when both the money grow, you know that you're averaging it out to be the best. And then eventually when mutual funds become my more reliable option, I will probably switch off my savings banks and RDs and FDs and start looking into purely mutual funds. But is it reliable, and how reliable, I'll find out over time. No, not really. I don't really have a holiday interest, but typically, I think if I pile out like 2 to 3 months of savings and put aside, I can address the quick holidays that I can think of. So, but I don't really target holidays in this busy life. I know it's been something that I have been not doing, and I have to blame my own self for not being sincere towards my entertainment. But yeah, something to come soon, but I haven't really planned it. No, the thing is like, do your ground search. There are quite a good amount of leads online. You can find good amount of help that you can find on Quora, and there will be investment gurus who will be dictating what you might want. I mean, not dictating, honestly. They will be advising on what you might want to do, but be watchful about the advices, because there will be vested interest on what is said by whom. Not like everything that is told on the web is right. So that's one thing. Do your research good enough. Need not be. Don't make this research as a big homework to block you from going ahead with investment. Start doing something rather than wasting time on investment research and etc. That's my advice to anyone who wants to get started.